I've made this portfolio analyzer, and this video just looks at how it works. So in this Google Sheet, first thing to do is just do File, make a copy, and you can save down your own copy and put your own portfolio into it. Start off in column A and you put the name of the exchange, which here is London, and then the ticker next to it, and then Google Sheets will pull in the current Google Finance, or put in the current stock price. It'll then also calculate the growth of the share price over average of 4 weeks, 3 weeks, 2 weeks, 1 week, pulls in a 3-month chart as a spark line, pulls in what the gain is for today, the amount that you're up or down by today. Then when you're entering the trade, you put in your stop loss, your price target. It'll calculate the risk reward. It'll calculate the percentage the share has to move until your stop is hit, the percentage you'll have to move until the target is hit. Put in how many shares you've bought, the broker you've used, that's option, you can delete that column. The price paid is calculated because you put in the buy value so that you're including any stamp duty and any brokerage commissions. Calculates overall how much you're up or down by, current value of your holding, then put in the date you bought it. It's just pulling in today's date for a sale. Then it tells you how long you've held it for. It benchmarks the against whatever you choose. So this LONISF is iShares FTSE 100. So it's looking to see whether you've outperformed the FTSE 100 over the time period or underperformed the FTSE 100 over the time period. Percentage that the share is of the 52-week high, the date that it hit that high. Again, if you're not interested, don't have to have them in. Any notes on the purchase and on the sale. So did you buy it on a breakout? Did you buy it for good dividend? You might put in maybe things like the time of day you bought it, so then you can track whether you do better buying first thing in the morning or whether you do better buying in the afternoon when the US is open and maybe you get some better prices. Any dividends that you've received, because none of these prices and gains include any dividends. Whether the stop loss has been hit or not, whether your target has been met or not. Then when you put in, these are calculated, when you put in all the data, you just copy and paste as values and paste the formats in as well to here, and then it's locked in all your trades, and then there's a tab called Trade Summary that looks at how many profitable trades did you have, how many loss-making trades, what the percentage was, average holding period for profitable and loss-making trade, total profits, total losses, and there you've got an overall profit and loss, average profit and loss per trade, number of times that a stop was hit on a profitable trade, number of times a target was met on a profitable trade, and then ditto for loss-making, percent of times your stop was hit, percent of times your target was met, percent of times neither occurred. So if neither occurred, then you tend to be selling maybe in a bit of a panic. So you're not really following the discipline of your system because you're ignoring targets and you're ignoring stops. Then it says, okay, what was my largest profit? What's my largest loss? And then it's pulling in the ticker associated with that. And that is the file and how it works. If you're interested, you can subscribe to my YouTube channel, and if you also click the bell, then you'll get notified every time I upload a video. Thanks.